The current risks that South African exporters are exposed to can be categorized into two parts. The initial one is the barrier to entry. Most countries in Africa tend to lean towards their historical roots, and by this I mean who colonized which country. So you find that Francophone Africa is not as accessible to South African exporters comparatively as Anglophone Africa. The same thing applies to Lusophone, where the Portuguese players are much stronger. So we have this first barrier, which is how then do we access the countries. After surmounting that barrier, our exporters are then faced with local risks. So we are looking at risks that you could call completion risk, for example, if you are building a project. Most African countries are not well integrated in the global supply chains. So to getting materials in, getting expertise in becomes a challenge, and that could delay and create cost overruns for a project. And if that is mitigated or cleared, if that hurdle is cleared, then other risks come in, such as price risk, market risk. A lot of the projects that we are involved in are commodity-based, and with the commodity volatility in prices, this will create risks of affordability in terms of the project being able to sustain itself and repay the debt. And other risks exist in the countries, like political risk, regulatory risk. If you go into a regulated environment, you have to navigate your way around the local laws. So those are some of the risks that our exporters are exposed to when they go out into these countries.
And we'll focus a little bit on those political risks a little bit later. But for now, how exactly do you mitigate some of these risks that you've mentioned?
The risk mitigation approach is, for example, if you're looking at the initial barrier to entry problem, the Department of Trade and Industry normally conduct trade missions into African countries, and if our exporters can position themselves so that they take advantage of these trade missions, that sort of breaks the ice with these countries and the buyers in Africa, and that gives them visibility in the local space. Now, when you come to completion risk, when we are involved in a project, those are difficult, but you just have to, try and work it out. There are risks like delays at customs. Your goods have come in and you can't clear them, and maybe you have to pay a bribe, which, we are very much against. We've got a very strong anti-bribery policy. But these are the realities that our exporters face. But you have to get your stuff in and complete the project. If there's a completion hitch, then we can work around how to cover that. Why is a project taking too long? So the beauty of taking an ECA cover, which is the insurance cover that we have, we tend to be able to restructure. So if there's a delay, we can always accommodate that and get the project to completion. Things like local regulations, our policies are very clear. We have to comply. So if somebody goes into a country and does not comply to local regulations, then that is a carve-out in our policies. But we make sure that you are aware of those risks, and we tell you up front that you have to comply with local policies, you have to get your licenses in place, and so on and so forth. Global commodity prices is a big risk for us, because our exports rely largely on the availability of hard currency. Now, to the extent that the country is experiencing an export slump, where the hard currency in the country is not sufficient, that will create affordability issues for us. And the way we go about that, sometimes we advise the exporters and the financing institutions involved to get into a hedging. It's not very popular because it involves costs, but you hedge a portion of your output so that in case of a price slump, at least you're covered. And then political risk, we provide expropriation and nationalization cover. So if a country takes over your project for whatever reason, we will pay a claim as ECIC, and then we will try and salvage. We've got what I would call strong, or well, strong is maybe too strong a word, but we've got leverage. Being a government entity, we've got leverage with most governments, so we can go in and salvage and recover.